All right, I guess we're recording. So a happy day. Go 6:37 on Wall Street, approximately 3 hours before the open of trading. Welcome to QuantBox Live, where we get our macro on. Here we are. Cool. We're going to uncover the best fundamental opportunities across global globe. Take a look at AI-driven analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, seasonality, and more. Do you need assistance watching the VIX, gold, yields, dollar, yen, and more? Yeah, that's hard to do all that all at once. Well, great. So you can try to do it yourself, or you can automate it. Automate the process. And here's the thing. You're a retail forex trader. You're going to start trading like an institutional investor, because you're going to have that same type of deep dive knowledge. The only thing is, if you have Bloomberg, it's $1,000 a month. If you hire a quant to do it for you, it's probably $10,000, $20,000 a month to have a quant. QuantBox is $80 a month. And it's actually cheaper if you go with the professional subscription, and you get a lot more tools, a lot more automation, a lot more. Like, this is by far the best deal. But instead of $20,000 a month, you can start with $80 a month and have a quant work for you. The only thing is, it's an artificial intelligence quant, which is good because it doesn't ask for vacations. Cool. So anyways, if you're watching this on YouTube, hey, yo, you're watching it many hours late. Why don't you kick down, come clean, don't be a holdout machine. Take the trial. QuantBox.co. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. By the way, even the $8 trial includes things like the macroeconomics course. I like to call it, it's basically what, 80% of what I learned at Harvard with none of the math, which is good. Okay. No, it's honestly good stuff. It's like, no joke, real education, real knowledge. So anyways, you should do that. Oh, look at that. The font changed. Interesting. I wonder why. All right, let's log in. Okay. Boop, boop, boop. Boop, boop, boop. Dope. Yields back up, huh? Yeah. Which is actually a very interesting thing that I'm actually bouncing around my brain. What am I going to do to hedge now that the stock market is falling below technical levels I feel comfortable with? So instead of being indirectly hedged through income, I'm going to actually need to actually hedge. And by the way, we see VIX elevated. Well, that's other people are making those same decisions. That's how VIX goes up. It's not a survey like, how fearful are you? No, it shows you how many options are being purchased to hedge S&P 500 futures. So if VIX is going up, people are adding hedges. Okay, so I need to add a hedge. Do I want to do that? Well, all my stock market positions have option exposure. Okay, great. So what could I further do? Because I dumped the NASDAQ a couple of weeks ago, right? Like, and I got that cash. Well, cash is trash. And so one of the things I'm like, should I lock in that 10-year at 5? I don't know. I haven't made that decision. But, if the Fed is nearly done, then what you could argue that that's near the top. It won't be the exact top, but am I trying to hedge my cash and make money for the next 10 years? Or am I doing it for glory? Oh, I picked the exact top. Like, nobody cares. Okay. And if the Fed is cutting interest rates 1 year from now, the value of this 10-year T-note will go up. All right. So, I might add some exposure to these bonds or treasuries, right? Because then it also adds to the diversification of my portfolio versus a straight up short the NASDAQ. Okay. So I'm running that through my mind. Uh, Oil 84. Remember a couple of days ago it was 90. Gold at 2,000. Told you, told you, told you, told you. S&P 500 down. Dollar strong. Okay, and Bitcoin just another planet kind of stuff. But of course, that has to do with the news of a ETF. Let me expand this. Okay, continued risk off mode. Today hasn't opened yet, so we don't know, but it's leaning. So again, when you look at VIX, gold, dollar, yen, 10-year T-note yields, S&P 500, okay, over the week and over the month, QuantBox is still suggesting, look at buying dollar, look at buying yen, look at buying Swiss franc. Oh, helpful. All right. What do we got? All the stock markets are down. Let's get rid of them and see how this shapes up. Indices. Let's get rid of indices. Yeah, wow. So oil's a big loser. Pounded euro, kiwi, Swissy. Yeah, just mediocrity. I suppose if you got rid of oil and Bitcoin, that's going to be sideways, right? You can see out of the currencies, it's kind of like, do I have a drawing tool? Epic pen. Where's my EpiPen? There we go. All right. If you were to ignore those outliers, it kind of looks like this, right? So there's no real trend. It's just the noise. So one way to do that is you kill that and you kill that. Okay. And because what we're trying to do, let's do it that way. I want to, if everything were in these quadrants, that's good. And if everything was in these quadrants, that's bad. But it's a mixed bag. So, when you see kind of like this, nothing. It's mixed. Be careful. Okay. In the moment, this is going to change. This updates a lot, right, throughout the day. So this is definitely the now. And well, we go back to the stock markets. So, like, if we go indices only, down. And this is probably up. It's just not open yet. So, yeah, not good. Not good. So, I got to do something about this stuff. Is it really the 27th already? Is that right? No, it's only the 26th. Mm-hmm. This calendar frustrates me. Mm-hmm. Now, I need to add a little refresh button. But anyways, I've already monkeyed it up. It's not showing anything for now. I'll have to log back in. Come on, Wayne. I think the issue with building a calendar like this is that you get the data from so many data sources and they're all format differently. Never thought about how complicated a calendar would be. Seems like it'd be quite simple. See, and then this isn't coloring well for some reason, but anywho. All right, so it's Thursday. That's great. Okay, Thursdays are good. I like that. Thursdays. We might want to look at, yeah, I might want to pull those up. QuantBox says they're low, but remember, this is part of really the valuation of currencies. Why does a currency change value? Well, it crosses a border, supply and demand, import export. Okay, like that's what. If there was no imports and no exports in an economy, we call that a closed economy. The value of the currency wouldn't change. Okay, it's like my trips to Cuba this year. Um, in terms of Cuban pesos, nothing's changed. Peso is a peso. They're the they're quite a closed economy. Probably the only more closed economy would be what, North Korea, which is definitely closed. I mean, Cuba's not really closed; it's just closed to the United States, but nonetheless, it's somewhat closed. But so, in the terms of peso, nothing has changed this year. Um, However, when I went there, the demand for dollars doubled, which means the value of the peso, Cuban peso, dropped by 50%, okay, in 5 months. And in the previous 5 months, it dropped another 50%. So anyways, um, so it's all about import and export. So, even though it's considered low, this might be a cool part of your math. Okay. We want Australia to import less and export more. And well, they exported less. Is that right? Yeah. And they imported more. Wait, what? They imported more and they exported less. That's bad, by the way. That's bad. Anyway, so you want to look at that. Is that right? Is Europe really got 11.84% unemployment? Is that a depression? No, no. But it is part of the economic choices Europe makes. They're capitalist and democratic, but when you look at where they fall in the spectrum, they're lean more towards a socialist capitalist. And when you lean that way, you always have persistently higher unemployment. So it's just a consequence. But if you do have a job, you'll never get fired. Which get so anyways. And this is already tomorrow. I like this one. It's National Day in Europe. All right, cool. So I know there's more going on. Obviously, it's Thursday. There's weekly jobless claims and so much more. Oh, with we have a lot of central bank stuff going on this week, and this calendar is just not showing it. So we'll get to that later. Do I still have something in there? Maybe we could take a look at Europe. Oh, and is that not working? What? We still should be able to look at this. Let me just zoom in. Maybe it's me. Maybe I need to reboot my browser or at least reboot my machine. But anyways, Euro area. All right, this is going to be a fun day. I love it. It's going to be so much fun today. Anyways, just trying to get this together. See, that's not even showing right. Well, something's buggy today. Something is buggy today. This is showing UK 4.3 and Euro area 6.4. Is that right? It doesn't seem like it's right. Let's add the United States. Yeah, that's right. So, anyways, Euro area still not doing good employment wise. We'll add a little more time to this. No, nothing working today. I think I got a bad browser session. I think I need to reboot my machine. All right, so let's get to the charts. How about that? Let's just get on with it. One of the things that I've been asking you to watch is the USD yen. Our line in the sand was 150. It finally, after weeks, made it through 150. And what do you think? We were here, and then we were here. Okay, 100 pips. Boom. Okay, 100 pips in 5 minutes. And now it's gone. Doesn't matter. Probably not. But nonetheless, there's the volatility and it's expected. But here's where we are. Let me do it this way. The actual number we care about most, 152, I guess. So there can still be a fight going on. Be interesting if it double tops. But remember, dollar is strong because the world is in risk off mode. We don't like it, but it's happening. And the second thing is the yen is weak because the central bank of Japan is weakening its currency. So that double top might play out. It's important, there's no doubt. I think riding the 21 and using it as your dynamic level of support is the smarter way of playing it. That will be support forever until it stops. Okay. That's that. This is going to 200. It might take 20 years, but we're on our way to 200. Which is great, actually. I mean, I'm sorry for the good people of Japan, but I'm planning on visiting next year. So if their currency weakens and the dollar strengthens, um, more sushi for me. Yeah. So, anyways, if Kobe beef is half price, you know what I mean? I've had Kobe beef in Japan, and the problem is they fry it. And I'm like, oh, no, you don't. You're not frying that, are you? Yeah. I grew up in Saskatchewan, which means my mother fried pork chops every day. Nice. Little shake and bake action, huh? So, anyways, frying Kobe beef seems wrong somehow. All right. Where should we go? I guess we'll go here. This is an interesting one. And then we'll do some commodities and stuff. Okay. What we're trying to do is maintain our discipline. And this is what probably is happening. But along the way, there are key prices that people are sensitive to. In this case, this line right here. Okay. Now we're getting squeezed in essentially an apex, right? This way. So at some point, I think what will happen, or what probably will happen, is a pop and a drop. So very often people counter trend up from a situation like this and then sell it later. I just feel like this is still just straight up risk off. This has nothing to do with the economics of the United States of America. We have a ground war on its way. So Israel went in to Gaza, and they're not doing much, but they're setting up the show. Okay. And I don't believe it's going to be quick. Like they go in, bang, bang, bang. Oh, Hamas is gone. Everything's solved, everybody. We're good to go. Thumbs up. Green light. No. Okay. I mean, like, no, it's not going to be a 6-day war. All right. So, anyways, so I'm trying to follow this direction, even though we are on obvious support. Um, that's how I look at it. And, you know, that is the general idea. Okay. US dollar is going to be strong as long as we have that geopolitical risk. Okay. Euro dollar down, which means dollar strength. What we had, and this is important to recognize, you have to recognize failed patterns to understand what might be actually happening. That would be the logical plan. And in fact, I had that planned out for you. That's solid technical analysis, but something has changed and it's not technical. Okay. So at some point you're going to want to need, or you're going to have to make some decisions, right? Is that going to happen? Are we on our way back to parity again? Well, in the business cycle seasonality training I did yesterday, the one thing that can be the catalyst to something like this is war. Yeah, what can quickly break a business cycle? War. Yeah. Okay, anyways, zip over, do some commodities, and I'll let you go, let you loose on the markets. My oh my WTI. Okay. If you are going to try to be a bull, we're actually in an okay place right now. Let me dive in. I know I got a lot going here, but there's a lot of different levels of support. So just bear with me. What I'm suggesting, if you are a bull, I'm not telling you to be a bull, then here's the pattern. Okay. Is that what you were thinking? If you're a bull, right? Double bottom, higher high. Okay, higher low. And then that projects a new higher high. and then okay, higher high, new higher low. Okay. The amount of risk you're making, of course, is the distance from now to a lower low. So you also want to make sure that you think it's going to go higher than that. Okay. That's, huh? 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 That's good. That one's a good, yeah, that's a very interesting price. Do you guys remember? I think I did it here. I covered a hurricane coming in low under Cuba, a couple of weeks ago? And I said if it comes in low, two things typically happen. It runs into high pressure and the mountains of Mexico, but you need a high pressure somewhere else, and it moves up into the Gulf of Mexico, right? Yeah. Um, or the second thing is it gets hung up on the mountain. Okay, so there isn't low pressure in the Gulf of Mexico. There's high pressure there, so there's nowhere for it to go. So it just sits. And apparently, Acapulco is gone this morning. Must have been high pressure in Texas or the Gulf of Mexico. The hurricane wants to turn north. It couldn't do it, so and it can't continue to go east because the mountains there are high, and it just sits, and it just you know rains. So, anyways, interesting. Not if you're Mexican, though. All right. Definite top. Okay. Someone is going to try this. It's fair game. You can do whatever you want. It's your money, right? Cool. I don't recommend it, but you should know that that's more possible now than before. Okay. If you bought this dip, you should assume we're breaking 2000. Otherwise, that's not a smart trade. If you're like, well, I'll buy it here and exit there, come on, bro. Seriously? Okay. That's like a celebrity wedding, you know? You get married, you get your photos taken, they're all printed in all the magazines, and 4 days later, you're divorced. I mean, really? All right. So, anyways, up would be better. And I have 2080 is the next line. Whatever, but you shouldn't be buying it here, knowing that someone's going to try to sell that. That's classic. I don't like doing stuff like that during fundamental, right? A fundamental move. I don't believe this is a technical move. So be careful with that, but watch it. So you got to be careful on this one, even if you're long and your entry is here, you know, we don't know. Like it can come down a fair bit and then move back onto the direction. So, anyways, just whatever. You counter trend it if you want. I wouldn't recommend it to a friend. And you're my friend. And there's the car accident. I gave a terrible analogy. I guess it was last week. Probably was it last Thursday? Anyways, the I gave the terrible analogy of people just standing there watching a you know, staring at a car accident. Now I gave her a true story. After saving people's lives, I turned around and there was 2 dozen people staring just watched. They watched the whole thing. Me and a truck driver pulling people out of a burning car. seconds before a literal explosion. And 2 dozen people watched it. They would have posted it if it was social media time. They would have taken pictures. Look, the car's on fire. These people are saving. Put it on Instagram, right? You're like, dude, help me open the door. We couldn't get the door open. We had to pull them through the windows. Have you ever pulled an unconscious person through a window? How about somebody that weighs nearly 300 pounds? Yeah, that's what we had to do while everybody watched. Nobody helped. So, anyways, this is a terrible situation, and you need to do something. Okay. And you're like, well, what's the big deal? I'm selling this way and I'm making money. Cool. That's good. I mean, honestly, that's good. But what bothers me is nobody really benefits from this downward move. And there are millions of people that need this to go up because they're too old to work. It's supposed to be the easy part of their life. Okay. So we need this to go up, and it's going down, and it's a wreck. So how long could it fall? Well, one of the things I proposed back when we were up here talking about the potential, because that's clearly a place to sell. So I'm like, I don't know if people are going to sell it, but if that works and we make a lower low, this is what I said. It could fall for 5 or 6 months. Meanwhile, you just stare at it. It can't fall farther. It can't fall further. Oh, the 50% is going to hold. Oh, the 618 is going to hold. Oh, the 786 is going to go hold. Oh, we'll hold at this double bottom here. Oh, and the next one will work. The next one will work. The next one will work. No, it won't. You gotta like at some point, you have to say, I'm not going to take that risk. I'd rather risk losing on a hedge here. And when you hedge, the only way you lose money is if it suddenly goes, oh, everything's golden again. Good. All right. So you lose a little money on your hedge and game on with the long term money, right? You got to have your short term money and your long term money. Okay. All right. So, anyway, now I believe something has to be done. So, this is your wake up call. So, who knows how long? I don't know how long, but I have to pretend and prepare, for the worst, right? A 618 Fibonacci retracement from the last low to high, okay, is 3,200. Bro, we're at 4,200. We were at 5,000. Okay. The other thing I covered in the lecture yesterday in business cycles and seasonality, what I covered was the cliche is this is COVID hitting. And even though we all saw COVID coming, it took weeks and weeks and weeks and weeks for COVID to get out of China and finally hit the United States. Boom. And what did most people do? Nothing until we got here. That's the first mistake. But that's a small mistake. The big mistake is they never got back in because they capitulated and fell into depression psychologically. So I actually covered the psychology of a business cycle, and they never got back in. And we went right back to the top, fussed around there for a couple of months, and then doubled it, fussed around, and then up again. And people were here, then they got out there and they missed the whole up. Wowzer. So what's the cliche now? They're also going to do nothing on the way down. So that's not you. We need to do something now while it's still okay. And the trick is knowing when to get back in. One example I gave is Bill Ackman sold here. Actually, he used options to hedge, and then all the money he made on the way down, he plowed it back in right at the bottom, like literally to the day. It was a great trade. He did a great trade. And he's been heavily short US Treasuries, which means he expected yields to go up. And now he's out of that position. That's why I'm like, Bill Ackman is no longer shorting the 10-year T note. Therefore, maybe I should buy it. The problem is the Fed is still selling treasuries. And the US government spending is like out of control, isn't even the right tone or weight. It's like double what it should be. And we're bailing everybody out. Okay, we're bailing out the Ukrainians, and now we're going to bail out Israel. And you're like, but Wayne, these things aren't necessary. Yeah. I'm not saying they're not necessary, but I'm saying, where does the money come from? When we're like, we're going to send 100 billion this week, and then next week we'll send another 100 billion. Where does the 100 billion come from? Was it in our budget last year? Well, if it's not in the budget, okay. And by the way, when you have a budget and somebody says, I got free tickets to Orlando. Oh, well, we don't have, it's not in the budget. Even if you had free tickets to Disney, you still got to drive there. You got to stay at a hotel. You got to buy food and drinks. And even if you got free tickets to the park, you're like, sorry, it's not in our budget. But you're a millionaire. Yeah, because I have a budget. You see? So when suddenly you have an emergency, like we need to send a bunch of money somewhere, well, it's not in the budget. Okay. But even then, okay, especially let's say we balanced our budget. Let's say the budget of the United States was exactly the same as the tax receipts, income. That's why, by the way, it's called a budget is to balance. Okay. So let's say, but of course that is not true. But let's just say the United States budget is equal to the amount of taxation it gets from its citizenry. Great. So then suddenly we want to send 100 billion to Israel and 100 billion to the Ukraine, but it's not in the budget. Okay, and the budget is balanced. So where does the 200 billion come from? Put it on Joe Biden's American Express card. You imagine the points on that? Hey, Grandpa Joe, how many points you got on your Amex? 200 billion. Sweet. You get it, the 200 billion. He calls up Grandma Yellen. Okay. Grandpa Joe calls up Grandma Yellen, and they sell treasuries. They sell. They're selling. Think of it as a trade. They're selling. The Fed is also doing quantitative tightening. They're selling. Bill Ackman was selling too. Why? Dude, because the government's selling, the central bank's selling. Why would Bill Ackman not sell? Okay. So even though if Bill Ackman's out, the government's still going to sell more treasuries. More and more and more and more and more and more and more. And the Fed still has 4 trillion to go just to overcome COVID purchases. So, oh my God. So these yields might not go up much further. Maybe they go up. I think there's 2 scenarios. Yields on the 10-year T note go to 8% over the next year after year after year. Like no one ever buys a government treasury again. Right? Or yields just never come down. It's that way. Every time someone buys treasuries, that should lower the yield, but then the government sells more. and the government sells more. Like, we'll never get out of this cycle. Okay. Unless we slash spending and pay down the debt. By the way, I'm writing a book on how to get out of poverty. Getting out of debt is key, right? Like, to a person. I think a country should also get out of debt too, huh? It's a tricky situation. Anyways, so we have to put that into mind. It would be weird, but probably for the first time, quote unquote, in history, the stock market goes down and the bond market goes down. Anywho, so we looked at gold. So obviously be careful around the 2000 psych level. Okay. It's also that monthly reversal. Oil's very interesting. I'm gonna watch oil today. So gold is more like, do you buy a dip later? Or does the dollar just get so strong that it overpowers gold? That's true too. But I'm not gonna sell. That's it. Like, I suppose in that case, I don't care. If it's going to go up, despite that, it'd be better if you could buy gold in terms of euro or something. Okay, and some platforms allow for that. But I got my eyes on the stock market. My concern today is: am I going to hedge? How am I going to hedge? And I'm looking at multiple options. Buying the treasury might be okay. Um, you know, I could have an option strategy overlaid on top of the bonds. The bonds, it's like every time I say the bonds, it's like the Walmart. Hey, where'd you meet your wife? I met her at the Walmart. Yeah. Yeah. Where'd you get married? At the Walmart. Yeah. They should. They should do it. They should have a marriage chapel there. All right. So the Walmart, the bonds. Yeah, so I might do something like that. I'm looking at a traditional short position in the portfolio. Got a lot to think about. But if the world next year turns to somewhat normality, and then we go into recession, I would assume, and this is what I have to contemplate, that people will move into the 10-year T note. They'll move out of the 2-year and into the 10-year. And if that happens, the price of the bond goes up because people are moving over and buying the 10-year T note. And so therefore, if everyone's buying the 10-year T note, well, then the price goes up. It's just like anything else. If there's demand for these treasuries, the price goes up. So I'm wondering, should I buy it now? It might be near a bottom. And if you just look at, like, for the year, I think the price of the 10-year T note is down 25% year to date. Like, oh, snap. It's down like 50, 60% since COVID, right? Like, at some point, if I can buy it cheap enough, maybe it's worth the risk. And in 10 years, we'll be laughing if if I'm earning 5% on that. Okay, maybe we get inflation down to 2.5%, 3%. So I'm earning double inflation, and I get some diversification out of it. All right. And if I can do an options overlay too, so I can earn more like 12% instead of 5%. All right. So this is what I have to think about today. A giant for sure, maybe. A very confident maybe. I'm very seriously thinking about it. It kind of sounds like doing nothing. No. So it's hard, though. I'm telling you, it's hard because I got to take money out of performing assets and move them somewhere else based on assumptions of the future. So that's why we do analysis like QuantBox. So I will be doing that. So I'll leave you to it. Yeah, sorry if we're being tardy. Peace on earth. May the pips be with you. May your profits be above average. And I'll see you when I see you. And today is Thursday. So if you're a member of investorbootcamp.com, swing trading Thursday. So the day trading group and the swing trading group will be meeting. And we will plan on taking over the planet. Yeah. Cheers.